Okay, it's Bob Trade Genius again. Since I teased you earlier about the about a potential crash coming, showing you the VIX, now I'm going to show you the Fed balance sheet and where I think prices could be going in the next 5 to 6 months. Now, bear in mind, our stock market has been moving with the Fed balance sheet throughout this extraordinary rise from the bottom of 2008 into 2009. And in fact, this flattening that you're seeing here now is, we topped in February, and now we're rolling over into 2018. And we had an overshoot on the SPY, but it's coming back in. And if you went ahead and you take a look at where we're going to be at the end of 2018, and then you extrapolate back to where we were in 2014, and then you go down, it looks like the beginning of the year is probably a pretty good look, even the middle of 2013. And then you go over to SPY, you're looking at this 180 to 190 area on SPY. And we're at 280 right now. So you're looking at a potential 40% drop, which makes perfect sense because the last two bubbles that burst in 2000 and 2008, we had 40+% moves down from the highs. And I think we're going to probably see it again. And the only mitigating factors are going to be if they try to reliquify the balance sheets, and if this time it makes a difference or not. So, and I don't think they're going to move fast enough because they're still planning on taking this balance sheet down. And I don't think they're going to change policy because of the stock price. They'll change policy based on credit impulses and what it means in a real economy, and they'll be late. So that's why you got to really start paying attention now, because they literally are taking everything away. This quantitative tightening, the money doesn't come back. It's like you're given a charge card, and then every time you pay it back, they lower the limit. And so you have less and less to play with. So that's what this is telling us about the market. And that's going to cause a lot of pressure on the market. And then you have these FANG stocks, which basically created this artificial impulse, from basically the March low into this move that's starting to fail right now. And when that goes from virtuous to vicious, it'll accelerate the down move. So you need to get some sort of protection. Even if you don't believe me, you need to have some sort of protection, because risk happens fast in these situations. When VIX goes up, people are forced to dump, just like they had to dump in February. And you see how fast that happened. And then look at 2015 and 2016. We had two major downdrafts in spans of weeks. And that's what happens when there's no real buyers in the market and it's just central bankers. And then people sell and they panic. So anyway, thanks for listening. And be forewarned is being forearmed. Thanks. Bye.